My name is Laurie Goodman, and I'm the co-director of the Housing Finance Policy Center at the Urban Institute. So why has this credit tightening occurred? There are a number of reasons for this. The larger increase in the unemployment rate is for renters rather than owners. In general, owners have about 80% of the national unemployment rate. Renters have about 135%. In addition, homeowners are less likely to work in the industries that have been most vulnerable to COVID-19. So when the CARES Act began to allow forbearance, industry estimates on the number of borrowers that would take advantage of forbearance were quite high, averaging around 25%. In actuality, about 9% of the market is in forbearance, and about 25% of those homeowners are paying. Purchase activity has been very robust. In fact, the MBA purchase index is higher than it was last year at this time and the year before at this time. The median sales price is up over last year. However, it's very hard for borrowers, particularly borrowers of color and lower income borrowers, to get a toehold in this market. Credit availability has shrunk considerably. The Mortgage Bankers Association indicates about a 33% decrease in credit availability overall. If you look at, and credit has tightened everywhere, but it's particularly tight in terms of the credit score that somebody needs, and there have been heavy debt-to-income overlays as well. So it's important to realize that the credit box was already tightening into COVID-19. So, for example, for Ginnie Mae purchase loans, the percentage of loans done with FICOs less than 700 was about 65% in January of 2019. It's now about 55%. However, if you look at borrowers who both have a credit score less than 700 and a debt-to-income ratio greater than 40, 44% in January of 2019, 36% now. For Fannie Mae purchase loans, 18% in January of 2019 had a FICO score less than 700. The number is now 12%. And as much as credit has tightened in the purchase market, it's tightened even more dramatically in the refi market. Now, mind you, these are borrowers who would benefit from the ability to refi when the risk is already on the books at a lower rate. It's simply taking advantage of generational lows in interest rates. Nonetheless, the percentage of Fannie Mae borrowers that have FICOs less than 700 has gone from 29% in January of 2019 to about 9% in August of 2020. The Freddie Mac numbers and the Ginnie Mae numbers show very, very similar decreases. And then when you sort of look at who this affects, this tends to disproportionately affect minority borrowers. Why? Because Black and Hispanic borrowers generally have lower credit scores and higher debt-to-income ratios. Essentially, Black and Hispanic borrowers are being squeezed out of the mortgage market at one of the most opportune times to buy a home, that is, the ability to take advantage of generational lows in interest rates. The CARES Act allowed for borrowers to take advantage of forbearance, but it made it very, very difficult made it much more expensive, actually, for servicers to sell loans into either FHA or Fannie Mae or Freddie Mac when the loan is in forbearance. So if a loan goes into forbearance between when the lender makes the loan and when that loan is sold into FHA or Fannie Mae or Freddie Mac, that loan is only eligible for coverage with a penalty. So essentially, the GSEs require a 5 to 7 point penalty for any loan that goes into forbearance prior to sale. FHA requires the lender to indemnify them for the first 20% of the losses if the loan misses a payment in the first 2 years. So you actually look at the number of loans that go into forbearance and then are sold to the GSEs, and it's absolutely trivial. At the same time, this has caused lenders to say, well, listen, I can't make a loan where the borrower has any chance of not paying because the penalty is high, so I'm just going to tighten my credit box. Essentially what I'm going to do is I'm going to put overlays on top of the FHA or GS or Fannie Mae or Freddie Mac credit boxes. There are a couple of other reasons accounting for the credit tightening. The first is it's more expensive to service delinquent loans, and this is a more uncertain economic environment. And second, there are issues with advancing principal and interest payments that governmental policy hasn't entirely corrected. But I think these reasons are far less important than governmental policy itself, which is the penalties for purchasing loans that are in forbearance at the time of sale. This is just an unnecessary deterrent to keeping the credit box the same or even widening it at the time when credit is most needed, and you can really help first-time home buyers get into the home of their dreams with probably the most attractive payments they will see in their lifetime.